同志们，大家下午好。在经过上午节奏紧张的讨论后，现在我们进入到大会议程的第4单元。
After heated discussions in the morning, we are now entering the 4th session of this forum. In this forum, we are going to talk about financial development and financial stability. Over the past year, the Chinese government has announced a number of measures to further its openness. We have relaxed limitations for entry of foreign capital. We have enhanced interconnectivity between domestic and abroad in terms of capital, and China's financial sector is now opening its arms to welcome investment from the whole world. And this is conducive for China to improve its business environment. This will also bring benefit to all the peoples in the world. But this does not mean that we're going to relax our regulations. This does not mean that we will not be guarding against potential risks. What are the results of those measures for openness, and what are the areas to be further opened in the financial sector in the future? And how do we continue to improve our regulation in the future? And how do we guard against risks and problems? I think these are the questions that you all have on your mind. So we are very pleased to invite two very important figures in the financial field. The first is the President of People's Bank of China, Mr. Yi Gang. The other guest we have at this session is Jacob Liu, former U.S. Treasury Secretary. First, let's warmly welcome Mr. Yi Gang to address the floor.
谢谢主持人，女士们、先生们，各位来宾，大家下午好。
Thank you very much, Mr. Wang, the moderator. Ladies and gentlemen, dear friends, good afternoon. It's a great pleasure for me to be here at the 2019 China Development Forum. I feel very glad to share with you the process of China's financial development. Over the years, the financial sector has continuously developed, and it has supported China's economic developments. We have mitigated risks, and we have engaged continuously in reform. On the one hand, we have guaranteed sufficient liquidity on the Chinese market, and secondly, we have supported key areas and the weak links in China's economy in the field of bank loans, in supporting private enterprises, and also in innovating the supporting tools for equity financing of private sector. We have made significant efforts, and by doing so, we have improved the business environment for private businesses. And third, we have maintained a very stable macro leverage ratio. And fourth, we have balanced our economy from both home and abroad. We have maintained a relatively stable currency exchange rate for the RMB. And fifth, we have continuously promoted financial openness, and we also improved the formulation of market-oriented currency exchange rate for the RMB. What I want to specifically focus here is to talk to you about financial openness, which is the major work of our job. China has made significant achievement in this aspect in terms of financial services. As you know, that President Xi Jinping announced in April in the Boao Forum that the financial sector is going to strengthen the reform, and it is better to be early than late, better to be quick than slow. And then the PBC announced a timeline of this reform last year, and we have introduced 11 measures and have defined the timeline for all those measures. Today, most of these measures have been translated into practice, A few of them have not been put into practice, but we are in a finishing process of legislation. We have already started the approval process, and this has significantly advanced the entry of foreign capital into the Chinese market. For example, the UBS has partially entered China, and there is also an American company investing on the Chinese financial market, and Standard Pool has entered in China, and another financial company in the United States has completed its review in China in issuing credit card in the financial sector. China is applying with international standards to promote the openness of its securities markets, stock markets, as well as the financial markets. The Chinese financial market is continuously opening up to the outside world, and this is well regarded globally. Last June, the A-share market was included in the MSCI index, and last September, many international rating companies have included A-share in their review indexes. And currently, the Chinese stock market is also registering very good growth. And according to Bloomberg, in April this year, it will include China's securities performance in its overall performance parameters. And China is constantly referring to a basket of currencies in the process of building a flexible but market-oriented currency exchange rate scheme. The flexibility of the Chinese currency is becoming stronger, and we are going to build a relatively stable but floating and market-oriented currency exchange formulation scheme. The foreign openness is a trend unstoppable on the way going forward. This is an independent choice of China. It also meets the requirements of the financial market. It is also a pathway for China to further deepen financial reforms. First, the financial sector is a competitive service sector. The financial industry and financial market, they have three major functions. The first one is to allocate resources effectively. China has a very high reserve ratio. On the one hand, we have depositors. On the other hand, we have borrowers. How do we effectively translate this reserve pool into financial assets and allocate that to a lot of the companies on the market? So this is a very important function of China's financial sector. More and more financial institutions and central banks in the whole world, they have started to invest in the Chinese market. So the responsibility of our financial sector is to further open up to the whole world in an orderly fashion so that they can reasonably and effectively allocate their assets. The second very important function of the financial sector is to manage risks. Well, this is mainly achieved by the identification of prices and also by the provision of different tools. For the financial factor to support transactions, we must have a mechanism of identifying price in a correct manner, and the pricing of financial products can send a very important signal to a lot of market players. Pricing of the financial products. They can help illustrate the various information of a product, and it can also provide a lot of information to different types of market players. And in the meantime, financial service is also a very important means of hedging, and we can retain the value of our assets on the financial market. When a foreign investor comes into the Chinese market, when they invest on China, they will find that there are a lot of hedge products, and there is significant room of further developments in derivatives. So one of the key tasks of this year is for us to come up with a solution that we can offer more hedge products so that they can hedge against their risks and they can better manage their risks. The third function of financial sector is to provide financial service. So this is mainly serving the residents as well as the enterprises. Well, this is indispensable from the effective allocation of resources and also reasonable management of risks. But professional financial services can reduce the cost of transaction. It can also save time. To measure the provision of financial services, we need to look at how much time it is saving. To just give you one example, 20 years ago, if I were to pay for my utility fees and my rent of the house, I need to go to many different places. I need to spend maybe a half day. 10 years ago, if I were going to pay for my utility, I need to go to the bank and finish the payment, and it may take me 1 hour. But today, I'm using internet. I'm using a mobile app. I'm using mobile payment, which may take only 5 minutes for me to finish paying all those utilities. So this time saved illustrates the efficiency of the financial service, which has significantly improved. It's just like going to a restaurant saves more time than cooking, and buying a clothes saves more time than making one by yourself. So it's the same kind of phenomenon. So that is why I say that the financial service is a competitive service. So to meet up with these three very important functions, one very important approach is to engage in supply-side reform and to extend foreign openness. Financial openness encourages the introduction of all sorts of financial institutions and financial products. This can enable better allocation of financial resources. In the meantime, it is conducive for China to make the best use of two markets so that we can make the best use of all the resources. On the other hand, foreign financial openness can help improve our mechanisms. It can also help refine our systems. In this process, we can also learn from advanced economies and mature systems so that we can benefit in the fields of corporate management, financial regulation, and overall market development. Third, I would like to share with you 5 observations for continuous financial openness. In recent years, we have made a lot of achievements in this aspect, but in general, we are positioned at a lower level. There is still a significant room of further development. In light of this phenomenon, we need to engage in the following efforts. First, we need to stick to financial openness. Well, the financial sector openness must be advanced in line with the reform of foreign exchange rates. We need to take Chinese enterprises and foreign capital equally. They apply the equal standards of regulations, and domestic and foreign financial institutions should be treated as equals. we need to continuously improve the foreign investment regulation. We need to further promote the formulation mechanism of a market-oriented currency exchange rate. Second, we need to comprehensively engage in the pre-entry national treatment and negative list system. All the foreign institutions and all foreign capitals can enter the Chinese market as long as it is not the negative list. And third, we need to improve our regulations and systems so that we can be open in a systematic manner. We should be further aligned to the whole world in that in terms of business principles and rules. And fourth, we need to improve business environment. We need to further delegate power and improve the transparency of approval and improve the efficiency of administrative approval. We must make sure that all the principles are made simple and transparent. And fifth, we need to improve regulation. All the entering foreign institutions and capital must be put under strict regulation. And the last part of my presentation is about risk control system, which is in line with financial openness. Financial openness in itself is not the root cause of financial risks, but in the process of opening up, risks may become more sophisticated. So that is why we need to come up with a system that well guards against risks. Over the past few years, we have made significant headways in this aspect. We have further enhanced reform, and under the State Council, we have set up the Financial Stability Committee. The committee has strengthened the coordination of various sectors, and the Financial Stability Committee has an office in the People's Bank of China. So this has further added to the responsibilities of the PBOC, and the PBOC now has more resources of regulation. And second, we have stabilized the macro leverage ratio with the efforts in cutting excessive capacity and deleveraging in 2018. The overall level of China's leverage is 249.4%. This is lower by 1.5% against the year of 2017. Some of the debt financing would be switched into stock financing, and this may help further stabilize the leverage ratio. And third, shadow banking has been more scrutinized. We have come up with a number of principles to crack down on the chaotic phenomena on the market, so the shadow banking has been effectively contained. And fourth, we have strengthened macro and prudent management. Cross-border capital flow has been put into effective regulation. In the meantime, a number of highly risky institutions were put into scrutiny, and we have made important headways in all those fields. In the future, to further improve the openness of China's financial sector, we have to make the best use of the coordinating efforts and role of the Financial Stability Committee of the State Council. We need to form an integrated power of different regulatory principles. Secondly, we need to come up with a dual regulatory framework so that the currency policy can play a better role in counter-cyclical macro control. In the meantime, we need to strengthen our regulation over systematically important financial institutions. We also need to put in place real-time regulations on financial institutions so that we can stop the cross-border flow of financial risks. And third, we need to further build the infrastructure of the financial market. We need to use modern technological tools and settlement tools to dynamically monitor online and offline capital flows and cross-border capital transactions. And fourth, we need to come up with a more effective punishment mechanism. We need to have in place a platform for deposit insurance, and based on which we can come up a better exit mechanism. In this year, we are going to further implement what President Xi Jinping has mentioned. And no matter it is the financial services or financial reform, we are going to follow the key principle of financial stability. We are going to contribute to the optimizing of financial systems so that we can contribute to the high-quality development of the Chinese economy. Thank you very much. Thank you very much, President Yi Gang of the People's Bank of China, for your wonderful speech. Now let's give the floor to Jacob Liu, former U.S. Treasury Secretary. Let's welcome.
I thank our chair, Wang Yiming, for inviting me here today, and I enjoyed listening to comments of my friend, Governor Yi Gang, who's done so much to drive...
Thank you very much, Mr. Wang Yiming, for inviting me here, and it's a great pleasure to come here to sit down with Yi Gang to talk about some issues related to financial stability. And this morning, after finishing the discussion, we felt that we need to adjust a little bit.
To rebuild some of the confidence that's so important to the ongoing relations between our two countries. This was a topic that was central to our engagement during the years when I was the special representative in the strategic and economic dialogues. And I think the list of accomplishments that Governor Yi Gang went through was very much representative of the kinds of things that we hoped to accomplish. And as he indicated, it's not a completed mission, it's the beginning. The question is, where do we go from here? I feel like I need to begin by taking a bit of a step back and reminding all of us why it's important and why it's a good thing. In the United States today, to say that you want to globalize financial markets wouldn't win you a popularity contest in very many places. I, for one, still believe that the greater efficiency is something that can benefit all parties. A level playing field can not just provide for greater economic opportunity, but can ultimately build bridges between nations. And foreign direct investment from a U.S. perspective is something that's an enormous powerful engine for domestic growth and opportunity on both sides. Now, one of the things that was always clear in my engagements when I was in an official position was that we didn't start out with things being equal. Chinese investment in the United States was more open than U.S. investment in China, and U.S. markets were more open to Chinese products than Chinese markets were to U.S. products. So what are the conditions to have fully open markets? A lot of progress in some very important areas: full convertibility of the currency, limited restrictions on capital flows. Now, in order to truly make the transition to become a global reserve currency, to have the full integration, there needs to be a demonstrated willingness to stick with the policies that are articulated, even when there are bumps in the road, which there almost certainly will be, because markets go up and they go down, and it causes disruption along the way. I think the cost of open markets is something that we have to embrace and understand as we talk about it as a goal. There is certainly a risk that in a domestic context, that currency appreciation can become a drag on exports. There can be international friction if currency depreciation is interpreted as unfair competition. There's also the risk from foreign investment creating an impression of inappropriate foreign control. Several decades ago, the office building that I now work in was bought by Japanese investors, Rockefeller Center. It became symbolic of excessive foreign influence in the U.S. economy. Not that it was an inappropriate investment, but it wasn't an entirely positive impression that it left. There's the risk of that in both directions. There has to be a willingness to mediate some of the public reactions to what happens in an open market. Now, history shows that opening markets can be a win-win proposition. In 2015, when there was an important turning point in the management of the exchange rate, it served China's interests because the outflow of capital was a real problem. And it served the U.S. interests because we were very concerned that an undervalued RMB was creating an unfair trade advantage. And I think it actually helped to strengthen U.S.-Chinese relations that for the next several years, China's intervention to defend the RMB had the effect of offsetting some of the benefits that came from a long-term devalued currency. Now, that doesn't work in the other direction. If there's a perception that activities are being taken to gain advantage in an international context, that can lead to very bad bilateral relations. The transition to the market basket, I think, was misinterpreted at the beginning. And I took fairly dramatic steps to explain it in an American context so that it would be seen as becoming a more market-oriented move. And I think it was ultimately sticking to and defending the RMB but not forcing a depreciation that made it credible. Now, the topic we were given was to discuss opening in the context of financial stability. And I took that seriously, so let me share a few thoughts with you. As I think about the relationship between the U.S. economy and the Chinese economy, and more broadly, China's economy and the global economy, for much of the period of rapid growth in China, it's largely been a macroeconomic link. When China grows, it buys more things, so the only developed country that didn't go into recession after the financial crisis was Australia, because China's demand kept it up. The risk in Australia was that if Chinese demand fell, that would be something that could cause contagion risk. As you open up financial markets, you add to the risk of macroeconomic contagion, financial contagion. And I think as we've all learned, that can be dangerous in each direction. We learned it in the financial crisis in 2008 and 2009 very painfully. So what are the lessons that we learned from the financial crisis? There's an enormous need for transparency. The radar has to work, and you have to see risks coming, and there has to be the ability to respond in a timely way. Now, I'm not sure that we're moving in the right direction in the United States now. We're taking a bit of a step back because the time since the Great Recession has dimmed the memory. I think it would be very wise for China to learn from our lesson more than we learned from it ourselves and remember it going forward. And that means focusing not just on traditional financial products, but on new financial products, which in the shadow banking sector, in the financial technology sector, can potentially present some of those issues. Not that they necessarily do, but the radar has to be up so that you can see what it is that you need to address. And as we've learned over the last year and 2 years, deleveraging is essential, but it's also very hard, and it leaves behind situations that require the attention of policymakers to make sure that you stick with it going forward. I think that the emerging challenges are in the areas that are new. In the United States, I think the big risk that has to remain on the agenda is to ask questions about whether new products, new forms of asset management, hedging that is in a less regulated space rises to the level of needing attention. Our Financial Stability Oversight Council just recently made it more difficult to do that. So I would say from a U.S. perspective, we've taken a step back. That's an area where I think it's important to take a step forward. I think if you ask what are the questions on the horizon in terms of financial stability coming out of greater integration, we haven't experienced a major bump in the road with China's economy fully integrated. If there's a need for resolution, how will issues like resolution and ring fencing be dealt with? Is there an international dialogue so that there's a common understanding of how that will be managed? And I think there's a final thought that I have to add, which is it's fair to ask what will the role of the United States be in this discussion? In the period after the financial crisis, notwithstanding the fact that the financial crisis originated in the United States played a leadership role in establishing the FSB and in helping lead the world towards more harmonized global standards. The United States needs to play a role like that. China needs to be engaged in that process. There have to be common rules of the road. And at a time when the United States is stepping back, I think the United States has to be encouraged to play that role and be the full partner with other nations of the world. Thank you very much.
好，谢谢雅各布鲁先生的精彩的演讲。下面我们进入提问的环节。
Jacob Liu, and now let's kick off the Q&A session. If you have any questions, please raise your hand and introduce yourself before you ask the question.
Thank you very much. I'm Jacob Frankel from JP Morgan, and I have a question and an observation. Jack Lew started by noting that in the United States today there is really little political support for financial markets further opening, liberalization, etc. And Governor Yi Gang said that in China there is political support, and in fact it is recognition that it's good for China. So the question is double question, one for Jack Lew. Given these differences, what would you tell Governor Yi Gang to avoid? And to Governor Yi Gang, given these differences, what would you tell Jack Lew to improve political support? But let me make one last observation. You mentioned that we need to learn from history in order to avoid mistakes again. And I think that we see a very good example. In the great financial crisis of a decade ago, many of the countries in Asia were spared. And one of the reasons why they were spared was the lessons from the Asian financial crisis of '97 that brought about strengthening of the financial sector. Thank you.
Well, Jacob, I would say that the first piece of advice I would offer is to execute on the reform agenda that was articulated in the opening remarks. And that the fact that it might not be recognized immediately is not a reason to step back in the international space, but to press forward and to make it clear what is being done and why. Communication is essential. I don't think you can assume that because it's understood in China, that it's understood either in Washington or in the G7 or in the G20. And as China becomes a more a major part of a fully integrated global financial system, it takes on many of the communication responsibilities that are already incumbent on a Federal Reserve Board chair, on a head of the Bank of England, on a head of the ECB. And I think that looking back to 2015, I remember conversations I had with Governor Zhou on this when it was, I think, probably the first moment when it was critically important that the policy rationale for what China was doing had to be explained in that much detail in the international space. And I guess the last thing I would say is you have to do what's right in terms of China's long-term health, even in an environment when it feels like the recognition is not adequate because of the strained geopolitical relations. That to take a step back would only make that geopolitical tension get worse.
Jacob, I think in China, whether there is a political support for financial opening up is mixed. There is still different opinions. Some people support it, but others are afraid. But I think from our point of view, given the experience of our opening history, we thought that every field that are opening is getting more competitive, better services, and any field that are closed is less efficient, it's more backward. So that I think the financial market opening is good for China, especially good for Chinese people. That would make the foreign financial institution compete in China, provide better services and more efficient financial market as a result. So that we pretty much try to weigh the cost and benefit and make sure that financial regulation and the legal system that are ready for the opening. But I think as the Chinese government said that we have this roadmap and timetable, we are going to do it for the sake of China.
Yes.
I have a question for Jack about opening up the multilateral development banking system. And Jack, you'll recall that a few years ago, the United States was quite hostile to the establishment of the Asian Infrastructure Investment Bank, which, in my view, and for transparency, I'm on their international advisory panel, which in my view is making a great contribution to the funding of infrastructure in Asia in a sustainable way. Would you now think that the US opposition to the establishment of the AIIB was a mistake?
Well, I guess I would recharacterize our position because we had extensive discussions with our Chinese friends and with many of the countries that ultimately became members of the AIIB. And from the very beginning, we acknowledged that it was a positive development to create a mechanism to add additional lending capacity for infrastructure in badly needed regions. Our concern with AIIB was that it be set up on a basis where it would operate according to lending principles that strengthened the economies in which it engaged, that paid attention not just to debt sustainability, but to the economies and the social systems in the areas where it invests. And frankly, what we told other countries that were going to join was the time to raise those issues is on your way in. So we suffered from some bad publicity in our position. I think it's probably not the first time that officials who were not in the lead, made comments to the press that got more attention than what either the president or I had to say because they were more controversial statements. But what I just described characterized the engagement that I had and that President Obama had, at the highest levels. I think that what came out of the formation, the decision to form the AIIB, was an initial decision to partner with the international financial institutions that were well established to co-invest side by side, which had the effect of addressing the kinds of issues that we raised. We encouraged that. We encouraged the international financial institutions to do that, and I think it was a very sound way to begin. I think the jury is still out because the process of making investments that are not co-investments is still, I think, to come. I'm not aware of non-co-investment decisions to date. And I hope that a year or two from now we can look back and say that the kinds of considerations that we raised were the policies reflected the right principles. I just say two other things. One is you have to remember the context in which that proposal was made to form the AIIB. We were deep in a period of trying to get IMF quota reform through our United States Congress. I remember having to ask colleagues like Yi Gang to give me another year, more times than I wanted to, because it took us 5 years to get that through Congress. It was critically important that the United States ratify that. It was critically important to reflect the importance of increasing the voice of China and other developing economies at the established table of the international financial institutions. And I think in that context, the idea of the United States joining AIIB would have probably backfired not just in terms of the AIIB, but in terms of the ability to get IMF quota reform ratified.
谢谢主席。我是清华大学的
Thank you, Mr. Moderator. I'm from the Phillips Center of Tsinghua University. I have a question to Yi Gang and also to Jacob Liu. Thank you very much, Governor Yi, for introducing the measures taken by the Chinese government to further open the financial sector, which is very inspiring. But despite that, there are some overseas analysts who believe that at present the currency exchange policy of the PBC is not independent from the Chinese government. So under this circumstance, if we are opening to the whole world, there might be potential risks. Or we might have a currency policy that is not very flexible. Maybe can I get a feedback from this question? With respect to foreign openings and the independence of currency policy, I think this is a very good question. In China, we have the People's Bank of China law, the law of PBC, and the PBC executes the currency policy according to law. And if you look at the past 20 years, in particular, since the law was incepted in 1995, and over the past 20 years, you can see that China's currency policy in the Chinese framework has maintained very well and very stable. For example, if you can look at the commodity price over the past 20 years, you can look at CPI and other price indicators. All of them are very stable. If you look across the whole world, if you judge currency stability in the whole world, the RMB has maintained to be a very robust currency, and it has increased by 30% by the basket of currencies, and it has also raised by 20% against the US dollars. So in terms of currency fluctuation, the RMB is also a very strong currency. If you judge by capital inflow and outflow and international capital balance, in 2007, the surplus accounts for 10% of our GDP, but last year, the surplus under current terms accounts for only 0.3% of our GDP. So we have basically maintained a international payment and spending balance. The current currency policy framework is able to deal with greater financial openness, in my opinion, and it will also contribute to very effective foreign investment in China. As I have mentioned, that all the foreign institutional investors, they are very willing to purchase some RMBs according to some parameters, and so we believe now is the time for us to bring more transparency to our currency policy, bring more transparency to the tax scheme and also to the accounting scheme. We need to further open the institutions as well as financial services. So this will forever be a challenge for us, but to us at this time, I believe we have the capacity to well guard against the risks so that the currency policy of China can be better aligned with the fact that Chinese economy is part of the whole world economy, and also to the fact that China is more integrated with the whole world. Thank you. Next question, please. If there is no more questions, we have a question from online. And it's directed to Jacob Liu. It says that financial innovation and also the rapid development of finance-related technologies have promoted the global spread of financial services. This has also brought challenges to the regulations of financial institutions. In innovating the regulation of financial institutions, how should the U.S. government coordinate with other sovereign countries?
I think this is a very important question, and it's going to be a question that gets to be a bigger and bigger question as we see technology grow. I had to deal with this when I was at Treasury, when cryptocurrency kind of emerged on the scene. And we had a fairly nuanced view, and I think the right view, that we did not want to stop development of new technologies. We didn't think the government was going to be the source of the innovation that would either speed up or make more secure financial transactions. On the other hand, we looked at the cryptocurrency that initiated the discussion. It was Bitcoin, but it could have applied to any of the others that came after. And we saw things about it that raised concerns. First and foremost, anonymity. You can separate in cryptocurrency the technology of blockchain from the preference for anonymity. And the question is, how do you address the concerns that anonymous financial transactions raise without somehow stifling the development of a technology that offers enormous potential for the future? And we made the judgment to treat, for the purposes of monitoring the flow of transactions, cryptocurrency transactions like cash transactions, with a similar kind of suspicious activity reporting requirement. Now, I think we took a relatively moderated position. At the time, if I understood correctly, China took a somewhat more open position. But then the capital outflows in cryptocurrencies caused a reconsideration, and the policies, given systemic differences, became more harmonized. I don't criticize the initial decision made here, and I don't criticize the decision we made. We're all learning how to deal with these new kinds of technology. I guess the decision rule that I extrapolated from this experience was, to the extent that financial technology presents the kinds of either safety and soundness or consumer protection risks that we guard against in traditional financial transactions, those concerns are no lower in the world of financial technology than they are in the brick-and-mortar banking world. But to the extent that rules written for the brick-and-mortar banking world would just not be operationally workable in the financial technology space, regulation has to be creative and adapted so that it achieves the same goal in terms of regulatory objective without stifling technologies that could offer a great deal of benefit. I viewed cryptocurrency as something that I personally wouldn't have recommended an investment in because I didn't understand why it was not a fad that would pass in terms of one product versus another. On the other hand, it's not government's job to tell people what to invest in. If they're willing to bear the risk of a bad investment, that's their judgment. If it were to start to present financial stability risks because major institutions were taking the kinds of positions that could destabilize the financial system, then it would become a safety and soundness issue. So I don't think there's a simple answer to it, but I don't think the right answer is to either put up a pure green light or a pure red light. It has to be a much more nuanced approach.
我补充几句啊，就这个问题。第一个呢，就是金融创新呢是好事。
Financial innovation is a good thing. In particular, some technologies of financial innovation has reduced the cost and has further spread financial services for public good. So financial innovation is a good thing. And secondly, the financial sector is one that requires approvals. If you are going to finance money from the public, in particular from ordinary citizens, then there is this issue of risk. So as a license-featured business, we have to focus and highlight on security and safety, and in particular the interest of small investors. So this is the second observation. And also you said that financial innovation has brought about the issue of regulatory coordination, because a lot of the financial institutions, they have businesses cross-border, and so this is making the cross-border coordination between different countries more and more important. So we have a lot of discussions of this kind. When there is the problem, how do we address the issue in a cross-border manner, and in the meantime protect the rights of creditors? Thank you.
I just want to add, I 100% agree with Governor Yigang's statement about financial inclusion. I think when you look at around the world, the billions of people who will never be served by brick-and-mortar banks, it is a way to alleviate poverty and to bring people into the financial system, as long as the kinds of prudential concerns and consumer protections are respected, and that's an achievable goal.
好，我们这个单元
All right.
时间
Well, this is about time that we close this session. And just now, Governor Yigang and former Treasury Secretary Jacob Liu, they have given us very good sharings, and they have both expressed a positive attitude towards financial openness. They also stressed that openness must be made in line with financial regulation and financial stability. Governor Yigang introduced the specific measures and steps for China's financial openness going forward. This information, I think, is very important for all of us sitting here today, and it's also a very positive signal. Let's give them a big round of applause for their wonderful sharing. Thank you. Now we have a coffee break of 20 minutes.
第4单元到此结束，请各位来宾到会场外用茶歇。大会第5单元将于3点50